is this highly correlated with a different strategy in the portfolio? Because early stage venture, from a valuation standpoint and from an economic standpoint, is already extremely correlated. I mean, biotech is really correlated to materials tech, is really correlated to B2B software, right? So because you have this sort of overarching, the market moves very, very close together, much more so than public markets. We're trying to reduce that. We're trying to reduce where we can reduce, right? So that's sort of like downside protection. And then the upside is, if this fund does really well, are they owning significant amounts of these companies where the fund can pop off? Sort of like how you view a pre-seed or seed investment. So, we have two. You could even classify 3 of the 7 funds are actually quite technical. Could all be classified as deep tech, but they're getting us really different exposure, right? Arcadi is different than different than Joe Wilson, is different than another fund, which I think is still in stealth. So I'm not going to say their name yet, right? They're all betting on technology risk. They're all sort of iterating at the intersection of sort of science and business models and technology, but they're all really different strategies. And there is a 0% chance that they would invest in the same type of company. And so that's what gives us comfort there. I will say the one thing that people need to be cautious of in this area is that I don't want to be taking macro bets on whether software, whether materials, whether bio, whether climate is going to be the most successful area in the future. Because if you start dividing it up and saying, 20% into deep tech, 20% into consumer, like you are making a pretty big macro bet that I don't know. I know that I am not sophisticated enough to make at this point, and I don't think that anyone can be sophisticated enough to know that.